13.5 billion. Cash. Nuveen just decided it wants to be enormous.
Which, okay, big number. But I'm more interested in the rumor doing more work than an actual signed deal.
Uni first?
Sinters hasn't confirmed anything. There's no term sheet. The stock just went up because someone said nearing.
The market believes in vibes now.
The market is a golden retriever. Also, Bitcoin Depot bought a sports betting app.
That's a real sentence that happened.
We have so much to get into. The rundown.
Okay, so 13.5 billion, all cash Nuveen into Schroders. That's not an acquisition, that's a statement.
It's a big number. I want to see what they're actually paying for, though. Schroders has had some rough years on flows. You're buying a brand and a distribution network at a pretty steep price.
You're buying the global footprint, that's the whole move. Nuveen wants to be everywhere institutional money lives.
Sure, but everywhere costs $13.5 billion in cash. That's a lot of dry powder off the table.
Fair. Moving on, Hapag-Lloyd swallowing Zim for $4.2 billion. Two shipping giants, one deal. The consolidation play everyone saw coming after the Red Sea chaos last year.
And now it goes through every regulator in every jurisdiction that has an opinion about container ships. This thing won't close fast.
Okay, but my favorite deal of the week, and I will not be argued out of this.
Denso.
Denso. 1.3 trillion yen for Rohm. A car parts company buying a chipmaker. Japan doing Japan things, but at an absolutely unhinged scale.
That's actually not crazy. Automotive electrification means you need semiconductors in-house or you're at someone else's mercy forever. The strategic logic tracks.
It tracks. I just love that the number is in yen, so it sounds even more dramatic. 1.3 trillion.
Rolls off the tongue.
Meanwhile, Mirai Asset picked up 92% of crypto exchange Corbett for $92 million. 92 and 92. Someone in their comms team is very pleased with themselves.
Institutional crypto appetite is real in 2026. That's not a weird bet anymore.
And then USA Rare Earth buying Texas Mineral Resources for $73 million in all stock. Domestic critical minerals, supply chain sovereignty, the whole thing.
All stock on a $73 million deal tells you exactly how much confidence the acquirer has in their own shares.
Ouch.
I'm just reading the structure, Nate.
Okay, speaking of reading between the lines, UniFirst shareholders are throwing a party based entirely on a rumor. No term sheet, no announcement. We need to talk about that. The big one.
Okay, so $13.5 billion, all cash, Nuveen buying Schroders.
It's a big number.
It's a massive number, and I want to make sure people understand what this actually is. Nuveen is TIAA's asset management arm, so you've got this giant American institutional player reaching across the Atlantic to swallow one of the oldest names in British fund management.
Schroders has been around since like 1800 and something. This is a very old house.
1804.
Of course you know that.
I read things, Nate, so here's what gets me. All cash. No stock component. In this rate environment, that's a statement.
It's confidence. You don't write a check that size in cash unless you believe the combined entity generates enough fee revenue to justify it. And asset management fees are sticky. That's the whole thesis.
Okay, but here's where I push back. Asset management is under enormous fee compression right now. Passive is eating active's lunch. Has been for a decade. So what exactly are they buying?
Distribution. Global distribution. Schroders has relationships in markets Nuveen can't easily crack. Asia, Europe, the Middle East. You're not buying the fund performance. You're buying the Rolodex.
The Rolodex, very banker of you.
I know. I heard it as I said it.
But I don't fully buy it, because distribution only matters if you have products people want. And if both shops are running similar active strategies that are losing to Vanguard anyway,
then you've just combined two sinking ships into one very large sinking ship.
which is a more expensive problem.
Fair, that is a real risk. But I'd counter that scale still matters for institutional mandates. Pension funds, sovereign wealth. They want to write big checks to stable counterparties. A combined Nuveen Schroders is suddenly a much more credible conversation in those rooms.
That part I actually believe. The pension fund angle is real.
So we agree on something.
Don't make it weird. The other thing I keep coming back to is execution risk. These are two very distinct cultures. American institutional versus old British active management. That integration is not smooth.
Merging asset managers is famously like herding cats, except the cats have guaranteed comp packages and opinions about office locations.
And they'll leave for competitors the second they're unhappy.
Key person risk is the whole ballgame here.
Which is why I'll be watching the Nuveen fund consolidations very closely. They've already got shareholder approvals on the BXMX and DIX mergers rolling into SPXX before March 30th. That's the first real tell on how they handle integration under pressure.
And speaking of pressure under tight markets, we should talk about Hapag-Lloyd and Zim? Voices. Okay, so UBS called the Accenture Ookla deal timely and strategically sound investment in AI-driven network intelligence, which is a very expensive way to say they bought the people who run internet speed tests.
I mean, they're not wrong though. Telecom data at this scale is genuinely valuable. Speed test data is a proxy for network quality across millions of data points. If you're selling AI infrastructure, that's actually a rich data set.
Sure. I just love that AI-driven network intelligence is what we're calling speedtest.net now.
Branding is branding. But here's the one that got me. Uni first. No signed deal. No press release. Just a rumor that Schroders is nearing a purchase and suddenly shares are surging like the ink is already dry.
The market is just straight up writing the press release for them at this point.
Which puts both sides in an awkward position. Schroders now has to either confirm or walk back, and UniFirst shareholders are already pricing in a premium they haven't technically been offered.
Rumor arbitrage, the oldest game in M&A.
And then there's day one biopharmaceuticals, which analysts are flagging as a likely biotech takeover target. And look, I don't disagree with the thesis. Consolidation in biotech is very real right now, but likely target covers a lot of ground.
Half the biotech sector is a likely target, depending on which analyst you ask. It's almost a default setting.
Right, it's basically a participation trophy for small cap biopharma at this point.
Exactly. Show up, have a pipeline, get called a likely target.
Okay, speaking of things the market is reacting to before anyone's made a formal move. We should talk shipping because the Hapag-Lloyd and Zim numbers are genuinely wild. Spill the tea.
Okay, so UniFirst shareholders woke up this week feeling very good about themselves.
Based on absolutely nothing legally binding.
Based on a rumor. Just a rumor doing all the work. No term sheet, no press release, just Schroders is nearing a purchase and the stock goes full fireworks.
The market just said, sure, good enough. We'll price in the whole acquisition on vibes.
Which honestly, respect, that's efficient.
That is not what efficient means, Nate.
It's fast. Fast is a kind of efficient.
I'm going to need you to never work in finance again. But okay, moving on. Bitcoin Depot acquiring a social betting platform called Cut.
That's a real sentence that happened.
Is this a synergy play? Is there a deck somewhere with a slide that says convergence of crypto rails and social wagering ecosystems?
There is absolutely a deck like that. Someone made that deck with their whole chest.
I almost respect it.
Almost.
And then there's Sphere 3D acquiring a company called Cathedra Bitcoin, all stock deal, and they want you to know it is a very serious and considered strategic decision.
The name Cathedra Bitcoin alone, that's not a company, that's a villain's lair.
Right? It sounds like a final boss.
I do want to see the all hands where they explained that one to investors.
With straight faces.
Absolute poker faces. This is a cornerstone of our long-term infrastructure thesis.
Okay, but here's the thing. The Schroders Uni first situation is actually worth watching seriously, because now both sides are on the clock. Either confirm it or deny it. That pressure matters.
And we will absolutely be tracking that, along with some much bigger fish. Tomorrow's radar.
Okay, tomorrow's radar. The Nuveen fund mergers are the thing I'm watching most closely. BXMX and DIX shareholders already approved the move into SPXX, effective before market open March 30th.
ARB traders are already camped out on that one.
And honestly, they should be. The timing window is tight.
I'm more focused on Hapag-Lloyd and Zim. That deal is going to hit regulatory review in what, 4 or 5 jurisdictions?
At least, expect formal filings to start surfacing soon. That's months of process.
Could be longer. Shipping consolidation makes regulators nervous.
Fair. But the one I think people are sleeping on is Cintas and UniFirst. The stock already surged on a rumor. No term sheet, no press release.
Just vibes and a share price doing the work?
Exactly. Both sides are going to feel pressure to say something tomorrow.
Confirm or deny? Can't stay quiet when the market's already priced the deal.
Which brings us perfectly to our closing thought on why rumor cycles have basically become their own asset class.